How does forex trading work? You will buy a currency pair at a lower price value and sell it at a higher price, and the income is the difference between the buy and the sell price. So far, I have showed you the basics of the forex market and its operating hours. Now it's time to look at the currency pairs that we trade. The US dollar, the British pound, and the euro are the three most commonly traded currencies in forex. To make it easy for traders, banks and brokers use an ISO code for each currency. ISO codes are simple abbreviations of currency names, such as USD for the US dollar, GBP for the British pound, and EUR for the euro. Currency codes are generally easy to remember, but there are a few exceptions, such as the Swiss franc, which has the ISO code CHF. To help you understand better, here's the table with all the major currencies and their currency codes. When trading in forex, each currency pair consists of two currencies, the base currency and the quote currency. For instance, in the euro-dollar currency pair, euro is the base currency and US dollar is the quote currency. The value of the base currency is always 1. This means 1 euro is worth $1.0830. In other words, in order for you to get 1 euro, you would need to have $1.830. In the forex market, you have the option to buy and sell currencies, which is also called going long, buying, or going short. Selling. It's important to note that you can also make a profit by selling. When you look at a currency pair like euro-dollar, you should understand that euro is the base currency and US dollar is the quote currency. So the value of 1 euro is worth whatever the exchange rate is at the time in US dollar. When you trade a currency pair, you are either buying the base currency and selling the quote currency, or vice versa. For example, if you believe that euro is going to increase in value compared to US dollar, then you would buy the currency pair. Similarly, if you think that US dollar is going to weaken in value compared to euro, then you would also buy the pair. On the other hand, if you believe that euro is going to weaken in value compared to US dollar, then you would sell the currency pair, equivalent to selling euro and buying USD. You would also sell the pair if you thought that USD was going to strengthen against euro.